We're standing by for that first interest rate announcement of the year from the Bank of Canada. Bay Street's been betting on the bank standing still, and sure enough, they are. They're holding the policy rate at 2.25%, matching estimates, and they're keeping the target range at 2.25%. So I'm not seeing any huge surprises here. Let's get more from Earl Davis, one of our favorites when it comes to monetary policy, head of fixed income and money markets at BMO Global Asset Management. There's the Canadian dollar. It was already strong this morning, so
yes, we'll
keep checking in on it. You're in the camp, and Carl Shamala told us this earlier as well. You broadly agree that our domestic economy is weak, but we're being held up by exports, partly because the American economy is doing fine.
Yes, that's exactly it. And the way to look at that is when you look at the water or the oceans, you have the tides and the waves. Canada's the waves. Our domestic economy is the waves, and those waves are very low right now. But the tide is rising. That's the U.S. economy. And that has had surprisingly strong growth because of the easy financial conditions over there, arguably stimulative monetary policy at the same time. And the tax returns now are coming back in, that big, beautiful bill.
Yes.
U.S. economy continues to outperform, showing significant real growth and nominal growth, and that helps Canada because despite all the noise and everything that's going on, they still account for like 60% plus of our exports.
And a huge chunk of our economy is that we have such an open economy.
Yeah. Exactly.
The governor, Tiff Macklem, saying we're going through this structural adjustment right now. What does he mean by that?
What he means by that is no matter how much he lowers interest rates, it's not going to impact jobs. And the reason why it won't impact jobs is because we're not putting shovels in the ground right now. He lowers interest rate, we're not putting more shovels in the ground. Yes, Prime Minister Carney is working on policy and stuff to start changing that, to put more shovels in the ground, in addition to Premier Ford. But that's a 5 to 10 year story.
Yeah.
So what are you going to do now? So that structural change, he can't impact. What's interesting, though, in the U.S., they're experiencing structural change as well. AI, that's not going to change lowering interest rates, but they still have an easing bias and going to lower interest rates. Why is that? The reason why Bank of Canada focuses on inflation first, employment second, but lowering interest rates has an impact on the psyche and the psychology of the market. It makes people more willing to spend out there, maybe for quantitative reasons, maybe their line of credit or HELOCs or whatnot, that interest rate goes lower, it's cheaper to borrow. But also when interest rates are lower, you have more money in your pocket, you feel more likely to spend. So from a psychological perspective, it makes sense to lower interest rates a bit more, but based off economics, on hold's the right call.
The problem seems to be, though, one reason to cut rates is to encourage businesses to invest. So we just can't seem to crack that problem. Canadian firms not investing.
Yeah, I would say so. There's two things related to that. So we can't crack the problem because we don't understand CUSMA yet. It's being renegotiated. That is the economics of doing business, of cracking here. Because when businesses put shovels in the ground to build out industry, they're doing it both from the perspective of Canadian consumer, but they're also looking at it from the American consumer because we're so close. And you don't know the cross-border economics yet. So once that's settled, lower interest rates will help. There's another way how lower interest rates, however, could help as well. Lower interest rates here in Canada, especially when it's not expected, actually weakens the Canadian currency.
Right.
So right now we've seen strength in the Canadian currency over the past 2 weeks. That's, yes, related to U.S. dollar weakness, but nonetheless, we are significantly stronger, as strong as we've been in possibly almost a year on the Canadian dollar. That's not helpful for attracting international money to invest here because Canada is becoming more expensive. When the Bank of Canada eases interest rates, the interest rate differential between Canada and U.S. has a direct impact on the currency. It actually weakens our currency relative to the U.S. That might be a consideration going forward as well, too.
Why shouldn't the Bank of Canada just cut already then? Drive our currency down, make our exports competitive?
So from that business perspective, yes. So the question is, why are they not cutting? They're worried about inflation. So when and how are they worried about inflation comes across? They cut, weaker dollar means higher cost of goods,
Imports.
imports.
Yeah.
They cut, more people are buying when the we're not in recession. We still have positive growth.
Right.
So when you cut in that environment, it may stoke some inflationary winds. And core inflation is still around 3%. Their target's 2%. That is the reason why they're worried, because we're above the target for inflation. On the margin, they don't want to push it a bit higher. So that's why they're on hold right now.
Macklem, in his statement today, says economic growth likely stalled in the fourth quarter in Canada.
Yeah, I could see that. That's a possibility. You kind of see in the unemployment numbers, they ticked up a little bit. The business outlook survey, that's a very important thing that the Bank of Canada looks like. The businesses aren't as confident right now. So it's possible it's stalled. Having said that, growth right now in the U.S. is staying very high. And again, we come back to the original point. That will have a positive implications on Canadian growth for the first quarter, at least. So I wouldn't say it's stalled, but I wouldn't say it's gone negative.
No.
I wouldn't say it's declined. And stalled is not declined. Stalled is stay there. Muddling along used to be a phrase that was used to see. That's part of our underlying thesis, trading thesis, investment thesis for 2026, was that Canadian growth would significantly underperform U.S., but it would still be positive. One of the other things that's interesting from a Canadian perspective is obviously this commodity rise, significant commodity rise. We are a commodity-based country as well. That increases the potential amount of investment that could come into Canada from reopening mines, expanding mines, the critical earth, gold, silver. We have everything here in Canada. That's a positive. But again, that's a medium to long-term story. It takes a while for that to show up in GDP.
And isn't there a problem with that? Commodity prices go up, and then that just brings on more supply worldwide.
Yes, possibly. But what's interesting about the market right now, we spoke about structural change. We're possibly undergoing some significant structural change in the commodity world. And what do I mean by that? Given how we're seeing the fragmentation of the world, as Prime Minister Carney spoke about, different sort of blocks and stuff.
Yeah.
Individual countries right now may want to store their own commodities. They may want to build oil storage. They may want to do it. We saw it in China. They've been way ahead on this, the wheat storage, the oil storage, just so they're not dependent on the rest of the world.
Yeah.
And I think that independence, or that need to be self-sustaining, is increasing, which puts a demand for commodity, makes it still cyclical, but could have this as an extended trend. It could be a multi-year effect in regards to commodity prices staying high or going higher.
That's interesting. We've heard about that, a balkanization of the world commodity market.
Yes, exactly that.
Yeah.
It's exactly that. And the environment is primed for that to happen. And that's a long-term story. And another very interesting thing about, just not a commodity thing, but interesting thing about commodities when you look at it, that significant rise in gold and silver especially. What happens when you get a significant rise in silver, it usually expands into all commodities for a while. Why? Because silver is actually a store of wealth. You use it to purchase things. Now, wheat, oil, almost all commodities are the cheapest they've been in decades if bought with silver because of the rapid rise. So what happens? People who have silver now start converting that into the other commodities. A very interesting thing about the commodity world. The reason why I'm so detailed on this, in my former world, I used to be the head inflation and real rate trader at one of the pension plans.
Yeah.
And I had to know commodities, inflation inside out. And these are one of the things where it becomes a virtuous cycle and could be extended. So this is in the back of my mind from a bond investor perspective, that inflation could rear its head again because all this shows up in prices, but that's not a story right now. That's a story for 2027 and beyond.
And just tell us a bit more about the role of silver. I didn't know it was so important.
Yeah, silver is and becoming increasingly important. So silver has, let's go back to gold first. When people look at gold, it's a store of wealth. It's used basically as for purchasing power,
right,
and to maintain real wealth. Silver has two things going for it. One is it has that store of wealth, especially when the price is so much cheaper than gold per ounce. Like
Right.
it prices itself out. You think of India, the biggest one, the biggest retail investors in not investors, buyers, because they buy it for jewelry.
Yes.
In the world.
Yes.
They've been converting to silver as well too, just because the price per ounce is so much lower and it's increasing. It's becoming reinforcing. So you have silver as that store of wealth as well, but it's also an industrial metal. And it's used significantly in electricity and building up grids and whatnot. And we see that the whole grid needs to be redone in North America. So there's demand there, increasing retail demand, but it's also a store of wealth. And when converted into other commodities, all the commodities look cheap. This is when you start seeing people going out of silver into the other commodities. It's a broadening of that boom, which from a bond investor's perspective, again, is in the back of my mind, but not a story for today.
I just wonder, though, the government has their national projects, and there are things like LNG and copper. Well, that's great, but why don't we have more companies like ASML, a Dutch company? Because it sells stuff regardless almost of price. You can't get those lithography machines from anybody but ASML.
Yeah. And I think that's the next evolution. So, I think another way to rephrase exactly what you just said, we need to refine the stuff that we're taking out of the ground. Get the value add, sell the value add products in addition to just the commodities. And I think opening up the borders in the next few years is a way of the future, and that's the path to exactly what you just mentioned.